DoubleLine's Asset-Backed Securities ETF, which will go under the ticker DABS, is a fixed income ETF that is exclusively focused on the asset-backed securities market.
Asset-backed securities are the securitization of assets and the associated contracts and revenue.
And these assets can be either financial assets, such as auto loans, consumer loans, student loans, or tangible assets or hard assets, such as power plants, airplanes, or even data centers. The important thing to note for asset-backed securities is the investor in asset-backed security has the asset pledged to them, but also all of the cash flows associated with that asset as well.
ABS as an asset class has really experienced this exciting growth and evolution over the last decade. However, it largely has been confined to an institutional buyer.
And with the release of DABS, it will give all investors asset-backed securities on a pure play basis.
A lot of what is out there has exposure to CLOs or mortgage-backed securities or CMBS. We at DoubleLine have sort of taken the initiative to do single sector ETFs to complement our broader ETF platform. DABS is really just the next evolution of that offering. The DABS strategy will invest in investment-grade ABS. It reflects a broad spectrum of economic activity. The intention is to invest in both consumer areas of ABS as well as commercial industries, such as transportation assets, such as renewable energy projects. The team is really just trying to find cash flow rich and asset rich secure transactions within the structured products family.
Asset-backed securities and the investments that DABS would take on would be very resilient. We are focused senior in the capital structure, which would be more defensive positions. And just to put it in context, both the consumer and the hard asset or tangible asset side would have structural mechanisms in place to withstand severe recession. We could see losses in the consumer space double of what we saw during the Great Financial Crisis, and you would not expect principal loss.
This is really driven by two factors. One, the actual assets are put into an SPV and ring-fenced, which helps ultimately in a distressed scenario with recovery rates. And two, there's inherently built-in structural protections within asset-backed securities that help the investor.
Our approach will be very directed. We are looking for investments that provide security. We are also going to be exploring the growth and the evolution of ABS and introduce newer concepts into that portfolio.
DoubleLine as a firm is known to be structured products experts within the industry. When we started the firm in 2009, we really cut our teeth with mortgage-backed securities, both on the agency side as well as the non-agency side. ABS is really an extension of that structured credit experience.
The opportunity set is great, but what is unique to this offering is that there's a very strong team behind it. The team has tremendous tenure in this space, has managed through very difficult economic environments, is multidisciplinary with very different skill sets, and has an excellent track record in this space.
And when you marry that with our fixed income asset allocation process, where we get broader macroeconomic viewpoints from people like Jeffrey Gundlach, like people like Jeffrey Sherman, those two parts of the firm together is how we mitigate both macroeconomic risk as well as asset sector risk. DABS is really the first ETF to give you full pure play exposure to asset-backed securities away from even other more traditional structured products such as CLOs or non-agency mortgages. DABS is a great way to diversify and complement your existing fixed income exposure. It provides attractive excess spread opportunities, and it does so in a way with the structural nuances of structured products to really protect your investment.
This is an exciting time in fixed income. There are many new innovations being introduced to investors to help them optimize their portfolios. Asset-backed securities can be one of them. And with DABS, for the first time ever, investors will have access to a market that will provide cash flow, potential for excess return, and diversification. We're very excited about this product.